Looking at the report, you indicated a significant increase in remuneration for top executives here in South Africa in the year to the end of March. Break that down into numbers for us.
Yeah, look, if you look at it, if you take where we are at the moment, I mean, it's made up of three parts. The sort of fixed pay, they've been relatively conservative, increase kind of between 6 to 8%, which kind of mirrors the sort of wider based employees. Where we've seen that increased beyond 8%, that's been a change of leadership or for some specific reasons. In the last reporting period, there's been quite a bit of change because companies have invested quite heavily in recruiting and retaining talent. The other part of the pay has largely been the variable pay, and that's where we've seen a significant change, particularly in the short-term incentives. Big increases, in excess of 20 or 30% in terms of pay being paid.
Let's go back to the fixed package that executives are getting right now. As you said, 6 to 8% is pretty much the average. That's still above inflation. Are we looking at that continuing into 2013? Can they still continue to get above inflation wages at the top level?
I certainly wouldn't expect above inflation, given the current economic climate, a lot of volatility, a lot of shareholder and media scrutiny. We're not expecting big increases around that. I think that's been cautiously approached, and we think it's going to be rather subdued at this stage.
Increasing trend with regards to short-term incentives for top executives right now. Tell us about that and what that means for remuneration pay.
Yeah, with that some time ago, even shareholders were calling for pay for performance. So rather looking at saying, look, we want to maintain your base pay, but we rather pay as the companies have performed. So provided the company performance has been there, bonuses should follow. Of course, the negative would be that if company performance is not there, we're still paying bonuses. That's a no-no.
Which is the best paying sector right now? If you were a CEO, an executive, you want to be in a sector that is going to reward you for all the risks and that you have to take on and the pressure of being a CEO?
That's an unfair question, but I think at the moment, if we look at the four industries we've analysed, to a large extent that has been in the industrial sector. But as I said, I think there's a lot of pressure around in terms of governance still coming in, looking at short-term pay. Even though the shareholders were calling for more variable pay, which has happened over the last reporting period, there has been now more pressure in terms of capping.
Tell us about that, and then tell us about how South Africa matches up with global norms right now, and where the world is going with regards to that governance factor.
Fortunately, we are followers of corporate governance around executive remuneration. So we look north in terms of our UK and European brothers, and at the moment, as we sit at the moment, the EU Commission is about to finalise proposals around the Basel III, for example, which includes remuneration aspects, and they're looking at, in the financial service industry, for example, once again, looking at capping their bonuses to 1 times base pay. That's scheduled for around about either January this year or January next year or the year after. That's likely to affect, first of all, our financial services industry, and then that kind of trickles into many of the other industries. So our pipeline for governance is not looking too rosy at the moment. It's not a bad thing, because I think we do expect, if there's capping, it doesn't mean that you lose it. It means there should then be deferral. However, if you talk to executives, if there's deferral, it kind of loses its attraction. The longer you wait, the more demotivating it becomes.
What is the implication of this for retention of skills at the top end for key companies in South Africa?
It's very critical in South Africa. Since we've joined the BRIC countries, we've got to understand that South Africa has now joined that pool of, our high-flying executives have now becoming an increasing risk. So interesting enough, in South Africa, retention is now a big issue amongst our top executives.
So what can company boards do, or what is the solution balancing the two together?
There's no doubt in the last reporting period we've already seen that move gone through to looking at companies looking at implementing kind of retention plans, particularly around critical skills, not necessarily at the executive level, because shareholders take a very dim view about retention plans at the exec level. But what they are looking is how do we invest and maintain and retain our top talent. So we have seen a lot of the pay mix has changed to more retention plans, we've seen sign-on bonuses play a big role in this last reporting period. There has been a shift in leadership. So I think we're going to see increased alternative plans come into play.
Interesting trend there. When it comes to executive directors, you also took a look at that here in South Africa. You've got 1,151 executives for JSE listed companies. Are we seeing an increase when it comes to the number of executives sitting on boards?
It's a marginal increase from the prior year, but we like to compare that in respect of our non-executive directors. That's a good way to benchmark that. Globally, that should be a 30-70 split. At the moment, we're about 1/3, 2/3, which either implies we've got too few non-execs or too many execs. I'd like to think at the moment we've got a healthy balance.
A healthy balance. When it comes to transformation, how much progress is being made on that
Transformation, it's better compared to, we've increased from around about 10% to 16% at the ACI level. From a gender perspective, which has been really a global issue, also a healthy increase from female representation on boards. And interesting, from a global perspective, South Africa ranks right atop there. So we don't have to shoot ourselves in the foot just yet. We're doing better, but it's not what the globally are looking at this stage.
Let's go back to some of the big cap companies in South Africa, larger companies in South Africa, and the pay you're getting. If you're a CEO of financial services sector, you're getting on average 6.18 million rand. That's up 12%. As CEO of resources companies, below market increases there in pay. But overall, though, would you say that it's still attractive to be the CEO or an executive, a CFO of a top South African company, or are we going to start losing these executives to other, perhaps even emerging markets?
Well, I think we've got to look at it in terms of the BRICS scenario, and particularly obviously the emerging or the developed countries, we're well behind those things, but we've got to look at the developing countries. I think CEO has a tough job. I think if we add there, and I think that's where we've seen the trend with short-term incentives. If you add short-term and long-term incentives together, sort of basic resources, industrial, they're earning 20 million. Is that comparable globally? No, definitely not. We hope we don't have a flight risk.
But as you say, it's not just about pay. You don't just choose to go live in another country just because of the pay. It's all the intangible factors.
Absolutely.
It's the cultural factors. Do you actually want to leave your home?
It's far better to stay in South Africa.
We'll leave it at that for today. Thank you so much for coming in, Gerald Seegers, Human Resources Services Director from PwC.